and that means we live here on our YouTube channel, Tackle Trading's Halftime Report, a daily market show where we break down the charts, the news, the information, give you some analysis and insight as to what we're seeing here from the coaches at Tackle Trading. We got a full crew here today. We got Coach Matt, Noah, and Mark here, and Cody on the back end producing. We're going to have a fun show here. Today's show, we are going to get into a bunch of individual companies. There's a bunch of more news on companies today than the broad markets. Some stuff out of the US and China. Obviously, we're going to have Mark break down some of that information here in a bit. Reopening theme, the impact of the test potentially on stocks if there is one. Visa, Zoom earnings tonight, and more. If you are watching our show for the very first time, welcome out. It's always great to have you. And Cody, I'm not sure if I am, so I'm going to stop talking and bring you guys in. Marky, how you doing there today?
I know, not too shabby. Not too shabby.
I don't know if that intro even got out of there. I had to actually stop. Cody, was I getting some audio skips there? I mean, that's the world we live in.
Yeah, you were getting skips, and then I'm like looking at Noah and Mark, and they're still camera moving. So I was like, all right, I guess Tim's skipping a little bit.
Well, while I close down some stuff, make sure I got a good Wi-Fi connection, I'm going to have you guys start. Matt, Noah, we've got you on the chart here today. First break down the chart technically, and then we're going to bring everybody else in.
Just trying to finish Tim's sentences as he freezes. Yes, the S&P, we've got a nice looking chart here. Pretty quiet day today thus far. We're seeing a little high base consolidation here above that 200 period moving average. It's looking like it wants to inch a little higher. I've seen the candle oscillate a little bit between red and green today, but mostly green. And again, this is a pretty interesting little consolidation pattern. You also have that rising 9 period moving average that can actually help act as a catalyst, help push that a little bit higher. But this 3,000 mark is a big deal, Matt. And if you come to look at how it's retested and held, I think that's a good sign of strength as far as the price action goes on the S&P index. If we back it out to the weekly chart, we're kind of hanging out in that same old 3,000 support resistance zone, but we're closing above it. And this is back up above all the weekly moving averages, again, showing the signs of that V-shaped recovery. And my big question is are we going to be able to keep this momentum up and break to the upside, or are we going to see it retest that 3,000 zone?
Well, I mean, one thing that and I've been talking about this last couple of days, once you break out of a certain significant level like 3,000 on the S&P, what you want to see is that quick price appreciation as a trader, right? That's what you want to see. You want to see all your stocks go up. You want to see all your triggers happening. But a lot of times what you do see is you see a little bit of consolidation in the marketplace defense. And I think that market playing defense and really holding that 3,000 level is as significant as the market just, going up, because in the face of the last, 4 or 5 trading days, I mean, the market literally has had every reason to sell off. Can we all agree with that? It's had every reason to sell off.
Right? 4 to 5 weeks, right? Not 4 to 5 days.
Well, but specifically over the last 4 to 5 days, I mean, you've had increasing rhetoric with China. You've had, the protests going around the entire United States. You have all of this happening right now from both a national perspective as well as a geopolitical perspective. And in the face of that, the market really hasn't sold in any capacity. And even on those intraday pullbacks, I mean, those are bought right back up. So, even though you want to see that quick price appreciation that all traders do, because it's like, oh, just go, you got to like the fact that the market's playing defense. I do want to ask Mark a question. Mark, you're the moving average expert here. I mean, you've studied moving averages more than any of us. You've back tested moving averages. You talk more about moving averages. I mean, when we're in the scouting report meeting and we're analyzing a chart, and all of a sudden everybody's like, yeah, I love that technical setup. And Mark's like, but there's this random moving average on this time frame that I'm very concerned about. With the market going above, it's daily moving averages. It's above this 9, 20, 50, 200 on the weekly chart. If you'll go back to the weekly chart, you're above the all of those, standard time frames on the weekly chart as well. Is that significant for you? And does that give you greater confidence? And is there any evidence that we've seen when you get back above all weekly and daily moving averages that we typically see price appreciation after that?
Yeah, I mean, let's hone in on the October through January timeframe of the market. If you could just highlight that area, like once we started climbing above moving averages, and Noah will fix
Yeah,
that.
I'll try that.
That was the screen I wanted to look at right there.
I know exactly. We got it in there somewhere.
So what happens when you get these trends starting to form and you start climbing above the moving averages? I mean, as we saw in October, November, December, January, I mean, this long stretch, what happens is as price starts moving up, you have all of these support tools. So you might have a few day sell-off and it will come down to a moving average, and then it will rally again, and then we'll have a day sell-off and it will come down, and you have this continual support mechanism that keeps moving up, pushing up, pushing up, pushing up. I mean, and these trends can last for a prolonged period of time. I mean, it took something like COVID-19 to pop its head in February to break that trend. And so as you've seen, and then you also have weekly moving averages underneath them, providing the same support tools. And so these trends, once they start getting going, it really oftentimes takes something of significance to derail the trend. And over the last couple of years, we've seen the Fed becoming more hawkish. We've seen the trade war kind of disrupt the trends. We saw COVID-19 as one of the more graphic examples in February. But you got that chugging engine going right now, right? You got that chugging engine right now, and it tends to propel itself. And and we've been saying for what, 8-9 days now, what is it that can derail this market? And everybody's had a blank. What's the thing that can derail this market? And what we're talking about is we're talking about that momentum. We're talking about that sentiment, and we're talking about the technicals, which all go hand in hand right now. So what can derail it? I don't know. I know that I'm going to play to the bullish side whenever I have a trend on my side. I'm just going to. I mean, because that is what you've been taught over 12, 13 years, some of you longer, in trading. You trade with the trend, you trade with the momentum. Maybe you don't go crazy, but you got lots of support tools on your side with those rising moving averages.
Mm-hmm. Yeah, and obviously trade with the trend. That's why even in our newsletter and our rankings in those meetings, Matt, when we have been talking about it, we've been upgrading sectors in the market now for a long time, because you got to trade with what you see. Price action is definitely king, and it is very impressive. But the volatility is slowing down. Do you feel like the defense is impressive when we're not getting upside? Just the fact that we're not getting any downside. I mean, those are a lot of dojis, like 3 or 4 days in a row, right?
Well, I personally don't mind 3 or 4 dojis and a consolidation above that 200-day moving average. And like I said, I do believe that the market, when the market plays defense in the face of reasons why the market should be selling off, and for investors and traders to maybe get a little cautious, lock in some profit, add some protection in the face of what we're seeing out there in the U.S. and from a geopolitical perspective. So yes, I do think the market playing defense, holding those intraday support levels, especially right there after we broke out of that very significant 3,000 level, right there on the 200-day moving average. Yes, I do think that should give traders a little bit more confidence in prices ultimately continuing to go up, because again, when you have every reason in the world to sell and yet nobody sells, yes, I think that does give you a little confidence. Maybe it's the trading community being a little complacent here, and just because let's face it, over the last 6, 7, 8 weeks in this market recovery, the market has had every reason in the world to sell. It's completely disconnected from any degree of economic reality right now. But the reality is it hasn't sold that negative news. And until we see the market really sell, aggressively some degree of negative news, I think the market should be a little confident in price appreciation.
Yeah, definitely been in a bull run here, and bullish rankings are appropriate. By the way, I'm looking across all the indexes. The most impressive percentage performance here today is the Russell. Noah, flash through the Dow, the NASDAQ, and the Russell if you can. Just tell me what you see differently.
Well, let's start out with the Dow here. Dow still hanging out below its 200-period moving average. The first thing I spot on that chart, and that 26,000 level is a big zone for it as well. But it does have a little bit of upward movement in price, a little sideways consolidation, not quite off that 9, but it's looking like a poised for a breakout. Just got a little bit of overhead resistance there on the index. So not a lot of room for it to run there. Let's switch gears and take a look at the NASDAQ. Tell you what, Tim, we're within a stone's throw of the all-time high right there. That's a big price zone for it there, 9,763, and we're within an ATR of that, really.
Yeah.
So it's slowing down. You've got that little doji. This is kind of one of those scenarios where, volume tends to get quiet prior to the breakout as everybody kind of waits to see who's going to press it to that new high first. And this is always just an interesting spot when you're up against a known resistance zone, particularly when you back it out and look at that benchmark, all-time high. And you get that, who's willing to step up right now and say, I'm willing to pay more for the stocks on the NASDAQ index than anybody's ever paid in history right now. I'm going to go first. If I don't die, and if it's successful for us, lots of people will pile in if it breaks out, but up until the point that it breaks out, it's a very tentative price point to be at.
So it's hard for you to get aggressive here, but the reality is that we still see a lot of people buying individual companies. The index as a composite is one thing, but you look across a lot of the charts, you might be able to make a different decision on a Microsoft or an Apple if it breaks out, things like that. That's why index trading, is not always reflective of those individual companies, but I understand the point. I'm going to ask you the question Matt asked us yesterday, Noah, what do you think the odds are we hit that all-time high, at least touch it or above it this week?
I think that's a high probability. Now, I don't know if it's this week or next, but it's soon. I think within the next couple of trading days, that's a very distinct probability. I think we're within that ATR of that. So all it really would take is one good day up.
Matty, ever so subtle momentum change here. Does that bother you?
No, it goes back to the market playing a little bit of defense here. Let's face it, guys, the last 2 days outside of, political situations and geopolitical situations, we really haven't had a tremendous amount of news out there to really kind of propel the market.
I was thinking the same thing, Matt. We haven't had vaccine news. We haven't had good news. In fact, we've had a whole bunch of bad news, and yet look at the last 5 days of price action. Despite bad news, and no catalyst good news, keeps inching higher. That's really.
It's fascinating to watch, Mark. After the quick recovery we had and people being concerned about, the economy and if we are going to have a V-shaped recovery, again, I just come back to the reality that, in the last 3-4 trading days, you've had every reason to sell this market and nobody has sold this market. Yeah, maybe they're taking a little bit of a break from buy action. But I do think it is significant that the market in the face of negative news has not sold this negative news. And, it just comes back to two different things, right? The market's going to discount anything negative in the short term because there is this underlying belief in the Fed put that the Fed is going to constantly increase liquidity. So if the market ever struggles, the Fed's there to save the day, right? And we've seen that argument play out many, many times. But Mark and Noah and Tim, has there ever been a stronger belief in the Fed put than there is today, though?
I was having a long conversation about this with some friends last night, and I've never felt like the market has more confidence in a backstop on this. And if you're, if you're a fund manager, a mutual fund manager, a hedge fund person, and you're running people's money and you're seeing this kind of appreciation in asset prices and you're not in, well, you're going to lose your job anyway. There's risk, but I don't think they feel that risk when you've got the Fed committed to using every tool at their disposal to keep that thing running. And so I think it helps people buy with impunity almost. Yeah. That scares me. That part scares me because
look at this. You got that rising 20, which is that turquoise color. In the last month, it has came down or approached the 20-day moving average 5 times. Immediately bought up. Immediately bought. It's
like a hot stove right there. It comes down and right back up. Just
right back up. Now, eventually that will change. But does it change 3 months from now? Does it change 2 weeks from now? Recognizing momentum, recognizing sentiment, recognizing the technicals, and when they all line up, that's a pretty reasonably easy trading environment. Now, that doesn't mean you go crazy, but it's tough being a bear right now. I know that.
Well,
It's tough being a bear.
You know, I do believe that the market has more confidence, and I love your phrase there, the backstop, right? That if the market ever starts selling aggressively, what's the Fed going to do? I mean, it's not just the last 2-3 months that the market has been focusing on that Fed backstop or the Fed put. You know, the 10% drop in price in the summer of 2010. What did the Fed do? They announced quantitative easing too. The 11% drop in 11. What did the Fed do? They announced more easing in 2012. What did they do? More easing in 2018 as they started curtailing quantitative easing infinity from 15, 16, and 17. When the market started selling, what did they do? They came off that. In 19, when we started seeing trade war, discussions and market volatility, what did they do? They announced further quantitative easing and an injection of $600 billion into the market. And what's happening with the Fed, and why I think that the market really doesn't have any fear right now in the face of some really, really damaging fundamental data, economic data. I mean, earnings, yeah, we beat earnings expectations, guys, but earnings is in a recession right now. Like literally in a recession right now. We're in a global depression right now. We're going through a global pandemic. We're seeing the labor market just get absolutely eviscerated. And yet over the course of the last 8 weeks, the market is just simply buying into this belief that if anything negative happens, here's the Fed's trillions and trillions of dollars. And whereas over the last 10, 12 years, I mean, it took years for the Fed to act. There were times when there was like 12 straight policy decisions where they literally didn't change a word in their statement. Like literally, they rarely did anything. But now with the market, the ever-changing news condition in the market, here's the Fed on a bi-weekly basis coming in to save the day. And so it's not only the fact that they've had a plethora of evidence over the last 12 years of the Fed saving the day. Now they get this evidence constantly, every other week right now about the Fed doing this or the Fed doing that. And so I just, in the face of all of this just devastating economic and geopolitical situations, that gives the market every reason in the world to say, hey, let me lock in some profit after, 440% price appreciation over the last 10 years. No, they're not. They're saying, no, we're going to ride that gravy train as long as the Fed is there to have our backs and hold our hands.
Yeah. So to answer your question, I would say no. I mean, obviously some of those conditions, there was some extreme confidence in the Fed, even like 13 and 14, Matt. I mean, they moved the balance sheet. What was it? 3 trillion to 4.5, so yeah, we've seen money coming into the market, but not like this. I mean, Jerome Powell has used the term bazooka at least a dozen times. That they have other
the term bazooka. He should use the term nuclear.
They're willing to do it. I still believe they're willing to buy equities, and I think they will at some point directly. That's my personal opinion. I know, but just read the tea leaves.
Buying right now. They're only buying ETF bonds.
Yeah,
right. I mean that's what they're buying right now. And so instead of lowering the interest rate, they're artificially trying to keep the interest rate down through the buying of bonds. Because who's buying bonds right now from the U.S. government? Are you? Here, take on my debt. I'll pay you nothing.
Take 3% inflation and get zero interest back? No, thank you. I'm not interested.
8% interest against 3% inflation. Yeah, who's doing that? Nobody's doing that, right? So who's buying the bonds to keep the interest rate artificially low? That's the Fed. So that's the entire point of quantitative easing, is when you have low interest rates, somebody has to continually buy that debt and buy those bonds to artificially, keep that interest rate lower and lower and lower and lower. And so right now, all they're doing is buying ETF bonds and US bonds, treasury bonds, they might expand that, but before they get into stock, they'll probably be buying corporate bonds, Tim. And so there's going to be a process before they start buying actual equity positions. I still think before they buy equity, they go to a negative interest rate. I still think that's in the cards. But right now, they're not buying stock. Could they in the future? Perhaps, but I think something devastating would have to happen for them to actually start buying stock.
You get me the odds between 1 and 100 that within the next 5 years they at least buy equity. I'd put it in the 90% personally.
I think give me 9 to 1 odds.
I might, dude. I think it's going to happen.
If you give me 9 to 1 odds, I'll go steak dinner right now. 9 steak dinners versus 1. I'll take that.
Within the next 5 years, they'll buy an equity.
I think it's a bad line.
Let me think about it. I am giving you too much of a line there. By the way, one sector grabbing my attention here today outside the index is energy. It's got a 2.5% run here, guys. I know oil's
breaking that 40 level. T. Break this down technically. We've been waiting a little bit of a breakout of 40 here. Noah, what's your read technically?
Well, 40 is again big price point for it, and we want to see it break out above that. It's testing that right now. I think for most traders, you want to see a nice close above that. But what I really like about it most, Matt, is that the higher lows coming in above that 20-period moving average, that gives it a nice springboard, and it has room to run based off of its historic price action. There's room for this thing to run as probably as high as 45 if you can get a clean break. So definitely keep an eye on that one. Volume is quiet on that, but if you can get a close above that resistance point, that could be a go signal.
Question I have for you regarding the energy sector real quick, and I want everybody to answer. Energy has been the worst performing sector, not for months, but for years, correct?
Yeah.
Okay, I mean, literally years. Is this the sector now that we're seeing that break out of that high base? And I agree with Noah, having a close on the ETF, vitally important. If you're a stock, you can trade it aggressively, whatnot. But if you're looking at an ETF that tracks the entire sector, let's see that close above that $40 level. That's number one. But number two, is this, if we do see that close above 40, can we play catch up against the other sectors? And number two, is this a sector you're looking to be a buyer in of equity, not naked puts, but equity with that breakout of 40?
Trading, yes. Investing, I still have concerns. I think they're going to lower dividends over the next several years. We've seen it out of major companies, even at $35 oil. It's not like these guys are going to be stacking fat cash, Mark. So I have some concerns long-term from an investment perspective, but from a chart perspective, Matt, there's so many dang good charts in this sector. And that reversal is legit. You've got tons of clean kind of room up into old levels that you can kind of map trades around. I see a lot of opportunity in the short-term trading. I still have concerns investing though. Mark, what about you? What about your thoughts on that?
Well, I mean, the one thing that if you trade energy, one thing you got to be aware of is that some of your classic stop loss, you got to have a loose stop. I could give a 2-minute speech, but at the end of the day, you kind of have to have a loose stop because price can be jerky because energy isn't the dog, it's the tail. And the price of crude oil is the dog that wags energy's tail oftentimes. And so the price can be really jerky. And you can see a lot of times, like if you had a really tight stop loss on some of these mini breakouts, you would have been stopped up only to have it go. So, I mean, you got to know the sector and the company's personality. It's also coming up and smack dab up against the 20 weekly right now, which for me isn't a great entry point, because it's just right there. I like a close above the 20 weekly. But yeah, I mean, listen, I mean, naked puts, I mean, I have really, really aggressive naked puts on a lot of things. Like, you know, so am I willing to own shares in certain things? Yeah, I am. I like the investing angle better than the trading angle. But once again, I like cash flow. Price appreciation becomes secondary.
So Chucky, question: when you're wanting to, you know, buy at a dip, buy on a massive depreciation, and you're only willing to take possession if you see a crash, that's when you're selling a 5 delta put option. That's when you're selling a 10 delta, right?
Well, but even that, like I've been selling much higher deltas on certain energy.
My question was, you know, on something like a breakout where, you know, you see that price appreciation, are you more willing to sell that aggressive delta, maybe a 30 delta, maybe even a 35 or 40 delta, a put option in that technical condition, whereas you're most likely not going to see that dip in energy right now to where you would get put to a 10 delta, but, you know, a little bit of dip on a 30 to 40 delta, you might get put to it, correct?
Yeah. And what I call it is trade management, trade action, chart alignment. So even though I'm selling a naked put, a breakout is a bullish action. Selling a naked put is a bullish action because, you know, you benefit from upward or, you know, neutral price. So yes, I would. I'd be more aggressive on a breakout selling a naked put, especially if I could identify a support level where that naked put level was above. But I mean, there's a lot of stability in oil. The big thing on oil coming up this week too. I mean, we got that OPEC plus meeting. I mean, that thing can really, as long as all of the sides get along.
Crude light while we talk about this, Noah. Because I want to
Yeah.
break this down, Mark. Obviously, I mean, oil is running here today, but that OPEC Plus meeting looms, and the assumption is that Russia is going to be a part of the extension. Explain everything that you're seeing there.
I mean, it's one of the last hurdles for really stable oil prices for the coming months. If all of the sides can get along and extend their cuts and play nice, now we know that that hasn't always been the case. I mean, look at that big gap down on the chart at the start of March. That's when they didn't play nice and started their little mini oil war. So, but as long as all sides can play nice and extend production cuts, well, outside of a second wave that shuts down society again, oil has pretty stable bullish sentiment and fundamental conditions moving forward for several months.
Didn't we have a bet that Putin and MBS was going to get along at some point, like in a
I
certain
won the
time?
bet.
Tim won the bet by 1 week.
But here's what happens with our games, Matt. Whenever I win, I don't ever get credit for them. I only get paid attention
To
to when
be fair, it's few and far between. It's hard to remember.
Yeah.
And so it's somehow you found a way to lose a game yesterday on the podcast when you were just the host.
Listen,
I don't even know how you did that.
Tim found a list of the 20 greatest athletes of all time, and somehow Bo Jackson, Jim Thorpe, and Pele wasn't on the list.
Mark quit out of protest. Noah, you're gonna have to
How
listen
do
to the
those
podcast.
like? And
How do you
Tiger
leave
Woods.
Bo Jackson off the list? I mean, you know, Pele,
I
you have to have a good global perspective and like soccer to appreciate that. I can see where you might miss it.
Bo Jackson was my first round pick.
Bo Jackson was who I played Tecmo Bowl with.
Oh,
until
have you
he-
ever-
Everybody played Tecmo Bowl with.
I think first of all, Deion Sanders should be in the top 20. It wasn't my list as well. I can argue it. There was a lot of good names on that list. Mark quit. Matt won, I believe. Listen to the podcast. In fact, Noah, bring up tradingjustice.com. We usually do a pitch at our little break. That's only going to be in about 5 minutes, but we're talking about it now. Matt, I thoroughly enjoyed the podcast. The game was the very end of it, and it was a lot of fun. But man, the podcast had a lot to it there. Kind of explain, episode 375.
You know, it's we had Jabon Wilson on to the podcast yesterday, and he's been on the podcast before. I believe he was on about a year and a half ago. Jabon and I have known each other for over a decade now, and it's just he's a brother from another mother. I just love Jabon so much. Love having conversations with him, and sometimes when he and I just start getting into it, we don't know where it's going to go. we just have conversations, and yesterday we had that. We had an absolutely awesome conversation with Jabon. He took about 20 months off trading, and I think that's a very important conversation to have because, as many active traders know, sometimes you take a break. Sometimes life happens. And Jabon had opportunities in other areas of the market, a trucking business, and then he got into Airbnb as well, right when the pandemic happened, by the way. And, coming back, we talked about why he took a break and why he came back and, the significance of having that skill set, but also some of the difficulties when you do come back after an extended hiatus from trading. And, I thoroughly enjoyed the conversation with Jabon, and obviously I wanted to also get his perspective on the protest and the Black Lives Matter movement and the significance and importance of that as well. So we took some time at the end of the interview to kind of get his thoughts on it because he obviously has a unique perspective there. But I truly did love the conversation, and I hope people get something out of it.
Yeah, anywhere you can find podcasts, you can find Trading Justice. Just go and subscribe. Give it a listen. We put it out every week. I really enjoyed it as well. I think you guys will get down with it. Back on market analysis here, and let's keep churning through the top-down stuff. Gold, red candle up at resistance here. Kind of the same thing we've seen for a couple months here, Matt. Par for the course with gold. It's been rattling back and forth. Give me a read if you can.
Do you want me to read it or no? Break it down.
You.
Oh, technically here you just saw resistance hold. You're still above the moving averages. I do think it's important if you're looking at it from a buyer's perspective to see those moving averages hold. A retest of 1700 is not out of the cards here, coming down into that 50-day moving average in this neutral type of situation. But fundamentally, there's nothing to see here. My argument will not change fundamentally on gold today or next year or the year after or the year after or the year after or even the year after that. So let's just get that out of the way. technically speaking, like I said yesterday and like I said last week, I do think the 1700 intraday support level holding was significant. If you're looking to add to a position, you can't add to a position in neutrality, in my opinion, unless you're looking to cash flow on that through either, say, naked puts or cover calls or any other cash flow type system. But the breakout here, you know, whether you put that at 1760, 1765, 1770, just depending on kind of where you see that resistance channel, I think a breakout could be significant after a prolonged stagnation in gold.
Yeah. Where is the breakout though? I mean, there are some tricky levels up here. Do you have to
Oh
clear?
man, you want to debate wicks and candles again, huh?
Not really, but I'm looking at that. I mean, could you trade it above the little pivot here, like 17?
I think
This
the breakout
intraday
for
level.
me, and I want to get everybody's take here, but for me, the breakout for me is 1760.
Mm-hmm.
I would agree with that based off of what I see intraday. I mean, and if I were looking to build a trade on it, I would look to maybe scale in, buy above 1760, and then maybe wait for that other high out at 1775 to add to the position.
Mm-hmm. Mm-hmm.
No, I mean, the only thing I worry about an aggressive entry with gold, and here comes Mr. Fuddy-Duddy conservative again, only willing to buy at lower prices, is like I'm trying to like see the catalyst. You know, oftentimes gold needs a catalyst, something maybe geopolitical. I mean, we saw it with the trade war. It broke out of resistance levels a couple times last year on trade war spook. With China fade into the background, with the economy opening up, like I'm just from a short term. I love gold. I love gold. I got naked puts on gold right now. Where's the catalyst to like really get people excited for that next leg up?
It's tough in the short term.
Do we need to bring up usdebtclock.org again?
Well, I mean, that's why I have naked puts. That's why I love gold,
Right.
you know, but I'm always trying to
Please
like,
don't.
you know,
It's depressing. There's no doubt.
and so, I mean, that's the only, like, it's like that catalyst that sends it to, I mean, because I love gold. We all love gold. We all, you know, the Fed printing trillions of dollars, the backstop of gold. We all love gold. We are all 100 universal agreement there. It's me trying to be greedy and maximize and trying to figure out.
I'll take the opposite side of that real quick.
Let me play contrarian real quick.
All right, go ahead. Yeah.
What is the number one reason why the market's been going up over the last month?
We all
in
know.
your opinion?
The Fed put in free money flying into the market.
Well,
agree
the
100%.
narrative is Fed put and the economy reopening, correct?
Mm-hmm. Mm-hmm.
Okay. The economy reopening theme should not be good for gold, right?
No,
Fundamentally speaking,
mm-hmm.
should not be good.
It should not be good for gold.
It should not be good for gold.
And short,
right?
as far as short-term price.
In short term, right? Because the entire reason why the market's going up is you know, the Fed put obviously is number one, but you know, the theme of the economy reopening up is just very, very dominant. I mean, it's every day in the headlines, guys. I mean, how many times have you seen a headline on CNBC, FinViz, Bloomberg, Reuters, Seeking Alpha, whatever news source you go to, market up 1% on the hopes of economy reopening up? How many times?
All the time.
Yeah.
Almost every day, right?
Mm-hmm.
I mean that even more than the Fed, that is the regurgitated theme in the market right now. And yet in that time frame where the market is going up, given the fact that the buying into the theme that not only the U.S. economy but the global economy is reopening up, gold hasn't sold in that. And I think there's a very similar argument on the buyers from gold, that the same thing I said about the market playing defense. Yeah, you want to see gold going up because, you know, gold's a core holding and it's a safety play. It's a hedge against inflation, so on and so forth. Make the argument. I mean, it's an easy argument to make. But the reality is, you know, in the face of the very, very, very powerful theme of the economy reopening up, and we're not going to even care about negative economic data. We're not going to care about negative earnings. We're not going to care about negative headlines. We're not going to care about any of this, because everything's going to be a brighter future 6 months to 12 months in 2021, now in 2022, at some point in the future, whether that's 6 months from now or 60 years from now. And I say that with all the sarcasm necessary, that the market's going to recover and we're going to buy into this market regardless of the valuation. And yet what has gold done? Despite that extremely bullish thesis, what has gold done? It's stagnated.
Mm-hmm.
I think the gold playing defense in the face of that is a very similar and powerful argument to the market playing defense over the last four or 5 days. Gold's just done it over the last 4 to 5 weeks.
Well, and I'll even add to that. I love all of those thoughts, and the defense is definitely there. But I'll add to one thing there. Gold is a better position trade than a swing trade anyway, Marky. So you never know when those catalysts come in, right? And if you are building a gold position as a hedge and based on the fundamental thesis, maybe we don't need to wonder when the catalyst is going to spark it. Personally,
you can't predict the catalyst.
Yeah.
Right.
Yeah.
I mean, nobody knows exactly what it's going to be because it's unknown. But I don't want to be out of gold when we do see that catalyst, when gold is playing really good defense. But, and in addition to the fact that I don't think there's ever been a better fundamental argument to own gold, even at the higher price threshold.
Mm-hmm. Mm-hmm. Yeah, no, I'm with you on all of these things. And while, it's sitting there in that range, doesn't affect the way I'm approaching it personally, but a breakout would be exciting. Mark, I know you'd love a pullback. I think we're all approaching it in the same ways we have for a long time. Silver did click that 19, come back on a little profit taking, still holding its trend here, but red candle above the...
It seemed a little bit more in profit taking here today. I got to be honest.
Yeah, 3% down. I mean, you're above the 9 EMA. I mean, you're still riding the lightning up there.
Give me a pullback to 17 and I'll take that trade.
Oh, I give me a Doge at 18 and I like that trade.
Oh, I would much rather have it at 17.
Oh, the 200-day moving average. Oh yeah. Sign me up for that one. No doubt about that. But I mean, the reason I say it might be a little bit more than profit taking, Tim, we're only about halfway through the trading day. And if you'll pull up your volume there, Noah, so we can kind of see those bars a little bit more. We're seeing an increase in volume against the average. And then when you look at on the intraday, if you go down to like a 30-minute chart, from the cash open, you've had an increase in volume during the sell-off. So I was looking in the news and I couldn't find anything in the news. Maybe there's just not an appetite for industrial metals today, or maybe it's just, gold coming down and the precious and the industrial metals coming down with it as well. But that increase in volume is a little concerning. I'm still bullish. I still love silver. I still love it above 18. There's no doubt about that. I would love it at 17 with a bounce at 17 more from a position standpoint than a trading standpoint. But is the volume increasing today a little concerning to you guys?
Yeah, you can't like that intraday chart, so yes, which would just give me more caution about how I'm going to play the pullback. But I think any legitimate pullback met with slowing momentum, a doji and confirmation, we're buying that, right? I mean, as traders.
Yes.
Yeah. So yes, as a trade today, completely would give me caution.
Yeah, it's Tim's dogs this time.
It was my dogs this time. I have no idea why they freaked out, but that is the joy of having your trading partners be canines in your office sometimes. But yeah,
dogs don't need much of a reason to freak out. Somebody walking on the street might have them freak out.
No, I mean, I like Noah's call at 17. It's the old support level, and it would be met with a rising 20, and it's right there at the 200. There's a lot of support there. Potential.
Shocker of the day. If Mark would have told you he likes a deeper pullback, I think we all would have known.
Yeah, we're all shocked at that at this point. We're all shocked. Okay, what about this? Doji at 18, upper moving of price. That's a swing trade, correct?
Yeah, you could trade that. You can trade a breakout at 19.
Okay, either one.
Yeah.
Pull back to 17, confirmation at 17, right there on the 200, the 20-day SMA rising up as well. That's a position trade.
I would love that trade as well. I might like that one more, but you may not get it. See, that's the thing about trading though. I mean, you don't dictate what you get dealt. You can have you can have your rules, you can have your systems.
No, you can't dictate it, but I do believe you have to visualize it.
Mm-hmm.
You have to visualize.
Man, that's an
you might not get it, but you got to visualize.
I mean, we should do a whole YouTube special on the art of visualization, because if you can visualize, oftentimes we're in the moment and people are like, what do I do? If you can visualize something happening days or weeks in advance and it happens, hey, it's a lot easier to make a good decision then, because you've been planning that out in your head all along.
I like that idea.
This is what I need. This is what I expect. It's not easy though to really kind of even teach that art of visualization.
That's
Yeah,
why
but I think it's a cool concept. I would love a conversation on it, Mark. Definitely, I wrote that down. We'll have a conversation about that in our meetings. Yeah,
Sounds like a special webinar to me.
Are you offering, Cody?
Oh.
Anytime somebody brings up special
Hey.
webinar, I'm just wondering if you're offering.
it feels like a Noah or a Gino topic, honestly. Like Gino can visualize, what he wants to
I
see
don't know if
before
I
a
want to
trade.
hear Gino's visualization.
I think that might be a Noah one, but it's really just playing the trade out, understanding exactly where all the step system is being put in place, and knowing if then. So if this
then
happens,
that.
then I'm doing it. Yeah, if this, then that, and you.
It's
do
always
that.
an AB.
If none of those
right?
if thens happen, then you do nothing and you let the trade keep going, and you have the patience to see it through. That's it.
Yep.
Yeah, it literally is. If A happens, then B. If B happens, then C. Right. I mean, that's kind of just mapping out and visualizing it. But I think it's a great topic. We'll tackle that topic, all pun intended, on the podcast soon.
I think it'd be a good one. Let's move on here, guys. Give me a quick peek at the dollar if you can. That downtrend continues. Cody, there's some interesting action in Forex here today. I'm finally not completely bored with it. At least the charts are showing me something. The dollar yen cross pair broke out. I don't know if you guys
I saw that.
this.
That one caught me off guard. I wasn't expecting the dollar yen to do what it did today.
Because the yen is weakening much more than even the dollar.
Yep.
Matt, the Australian currency is just running. I know we've been upgrading that recently. New Zealand currency is running. Is Forex making a comeback here, Matt? All you needed was a breakout. Now all these trends are starting to pick up, don't you think?
Yeah, I do. I mean, the Australian dollar and the New Zealand dollar, we've been upgrading those consistently over the last 3 to 4 weeks as we've seen kind of bottom start to form, price appreciation coming out of that. When you're looking at the British pound, you're probably a little hesitant right now with the British pound. The CAD, very similar to what we're seeing in the dollars, not the dollar, but the Australian dollar and the New Zealand dollar. That's running as well. Obviously, the CAD is going to be, tied to the oil market, in Australia. New Zealand is going to be tied to the gold market a little bit more. So, that's one of the reasons you're seeing some strength.
I was going to say the commodity-backed currencies are the ones that are moving right now. So
Yeah.
there is some speculation in the markets, and you're seeing things move out of these reserve currencies into more of these secured backed.
Move away from safety into risk. Yeah, I mean that's what you're seeing in currency. Look at the dollar CAD, like Matt brought up.
Oh, we pointed out the dollar CAD yesterday when you were saying, "Oh, I don't like these charts." It's like, how do you not like this chart? It was like, how do you not like this chart? And it continued.
Listen, you start getting action, traders get interested. That's the way it was. It was boring me to tears for about a month, but now we're starting to see some action. That breakdown was legit, and it's definitely coming down here, guys.
That's why in the reports, and anybody who's watched my Forex reports knows that.
And I don't know if you muted him.
I think I muted myself just by hitting my hand. But I always say, like, this is fishing. Like, you put your line in the water and you wait, and when it hits, you're very happy, and then you work that reel and you manage that trade, and you pull that big fish in. Other than that, you put the line in the water and you wait.
All right,
it's boring waiting sometimes.
I'll admit I was wrong.
The analogy included me fishing. We would never catch anything.
Just bring a case of beer, and it's more enjoyable that way.
Listen,
that's what I used to do. It didn't help.
I need to get out and go fishing again. I don't care if you catch anything.
Oh, get a nice kayak and go out kayak fishing. Oh, that's some fun right there.
Kayak fishing.
Oh yeah, you get your
no, I want
milk crate with all your
fishing.
supplies in it, and then you got the different lines on it, and you paddle out, and you get a nice calm place. This is out in like Galveston area when we used to do this, and me and a bunch of buddies would go out there, like 3 kayaks, and we'd go camp out on the beach, bring our kayaks out, and just fish all day.
Sounds fun, dude. I'm with you. I get it. It does sound fun. Bitcoin next, if we can here, BTC. I don't know if you guys saw this. It tried to break 10K. Yeah. Could not hold it. Now it's down here. Pretty ugly candle. Noah, give me a read technically. The volume's up. The candle's ugly. It tried to break out and failed. Not good things if you're a Bitcoin guy like I am. What's your read there on the chart? Noah is on mute.
Sorry about that. I was having a coughing fit earlier. So this is what I call whack-a-mole. It when price pops its head up, but immediately gets rejected right back down. Tells me that there's some supply out there, but whether it was that hitting that old resistance point, and that's what it looks like it did. It came out to that, what do we call it? 10,600 ballpark right there. And just like a moving average, it touched that, immediately sells off. So it pops up, runs into plenty of inventory, comes right back down for a retest. Now that can serve to help a breakout in the future because it just cleared out all the selling orders if it pops up and clears out the inventory. But that also might mean there's more inventory out there to hold prices down. So you have to watch the reattempt on that. If it tries to start breaking out again, there's a good chance it could run. You got that 11,000 number out there. That's a big number. But anytime I see that price break out like that and come back down, I watch for the reattempt.
Never good for charts when failed breakout occurs. Now, I know it's only one day, and we are still above some MAs, but not a good one-day move in Bitcoin. If you're long Bitcoin here, could not break and hold that resistance. Guys, that's our big picture market skyline. We're going to be moving on to individual company news. Like we said, go catch that podcast if you've not done it. We already talked a little bit about that. One thing I did want to make sure we promote today. And then again, if you are a pro member tonight, we got a great coaches show lined up. Mark, who's on the show tonight anyway? Who do we got? I think it's Gino and Tyler.
We have Gino and Tyler tonight on the Coaches Show. Obviously, two very experienced, great educators. Whatever they talk about, it is likely, whether you're a new trader or a trader of 20 years, you're going to glean some great information from them.
Yeah, I love both those dudes, and they're great coaches, great teachers, and great educators. If you're a pro member, you probably already know them very, very well. So make sure you come and join us. That's at 8:30 Eastern, and you can find that on the events page at tackletrading.com. There's also a link in the email you get on the Tackle Today email. Stock companies here, guys. Let's get into some individual ones. I want to start with Facebook. I found this story to just, honestly, I chuckled. I had a lot of fun with this one. I don't know what it means for the stock. Bring up Facebook if you can. Matt, they had a town hall, virtual town hall. There's been so much, obviously going on in this world right now. It's very highly, it's powder keg right now. There's no doubt about it. People's opinions are way up. People's emotions are way up. But then the Facebook employees, while working from home, they staged a walkout or something out of the town hall. Matt, what was this all about?
I don't know. It's just funny. It's just so funny when you think about the protests happening and the importance of the protests happening over the course of the last little bit, the significance of it. Here's Facebook, and the whole thing was they're upset with Zuckerberg over his, laissez-faire attitude towards political posts on Facebook, fake news on Facebook, propaganda on Facebook, and specifically in the face of Twitter, labeling some of Trump's tweets as, fact check the tweets. They staged a walkout in protest over that. So what does that walkout look like? Like they just shut down Zoom? Is that the walkout?
You get up and leave your Zoom video on, just like
excuse me while I walk out now. I got to log in first. You have to type in all caps.
Yeah, I mean, do they leave the Zoom on and walk out to show it, or do they just leave?
They'll just kind of exit.
Close out.
I don't know. That's why it's so silly and funny.
So cute.
Quite frankly, we're all working from home these days. We got to reinvent the way we have our.
So let me get this straight. The rest of the world protests by taking to the streets, marching together in unison, activism galore, chanting, all of that. And here's Facebook. I'm just going to shut my Zoom meeting off.
Listen, I'm tired of you talking about Forex. I'm going to protest by walking to my fridge and getting a Coke. I'm done.
Is that what you're doing when you leave the screen?
Mark does that 4 times every halftime report. Is that a protest?
I'm consistently protesting the content on the halftime report.
So we now know what Facebook protests look like when we see Mark walk away from his Zoom meeting. That's what a Facebook protest is.
I feel bad for the person who logs in late.
Hey, where'd
everybody go? Oh, damn it, I missed it.
Facebook's just cute. It's just cute.
I don't think it has any stock implications. By the way, it wasn't just employees. There were a few executives that voiced their displeasure with this, Matt. Obviously, when you're a company like Facebook, IP and talent is important, but feels like a non-story to me at this point. Anybody think there's anything here from the stock perspective?
The only thing it is cute and funny. That's it. And cute being, i.e., sarcastically funny. That's all it is. In the face of that, obviously Facebook's down a little bit. That has nothing to do with the protest in any capacity. That's just, there's a little bit of anti-stay-at-home stock right now, just in terms of today, not tomorrow, not the next day, but every now and then we see this where, you see the headline on CNBC, market up on economic hopes going up, and then some of these stay-at-home stocks go down. So
I mean, I think the only implication is because I think you can take, I mean, Zuck has basically said, we're not going to do anything controversial. And so it takes that like regulatory risk off the table for Facebook. So like, if you were worried that, hey, government's going to come in, do something to social media, Zuck says, hey, we're going to play ball. So you don't have to really worry about that.
Yeah.
Zuck's not going to risk his, revenue darling during an election season. There's no way that's not what Zuck's about.
No.
Zuck's about
Regardless
making money.
Yeah, Zuck's is all about controlling the masses and making money. But in terms of Facebook, I still like a trigger above 232 here.
I do as well. I actually think it's a really good setup. And I think, Mark, your point is very, very well said. I mean, he did speak with Trump on the phone on Friday. So Zuck is about making money. He's going to try the best he can to tone things down and keep that revenue coming in. It's an important year for Facebook, quite frankly. It's one of the reasons why in our prediction podcast to start the year, Matt, communications were in some of the top of almost every coach's picks, just the increased idea of being online. Facebook
it was Tech 1, Communications 2, and it was across the board for most people. But I mean, the difference between, Zuck at Facebook and Jack Dorsey at Twitter, Jack Dorsey has this idealistic hippie type mentality towards things. Zuck is a cold-blooded, hearted, could care less about anything, maximize revenue, maximize growth, stay out of everything else. And, you can say which one's better or worse, given what your personal perspective is. But there is a significant difference in how Jack Dorsey approaches Twitter versus how Zuck approaches Facebook.
Absolutely.
Speaking of Jack Dorsey, since we bring it up, pull up Square, pushing breakout level.
Pushing, confirming, looking good.
I mean, Square is one of those like cultish type stocks, not like a Beyond Meat or DraftKings, but it's a great trading stock.
Mm-hmm.
It can move. It can move.
Hey, pull me up a weekly chart on that, because the breakout of the daily is quite impressive. But I also think the breakout on that weekly chart is looking pretty decent as well.
No, I mean you got room to run, right? You got room to run. So
doesn't it just want $100 at this point?
What do you guys always joke? If it breaks 90, it's going to 100.
If it breaks 90, it's going to 100.
90%
this time, if it breaks 86, it's going to 100. But it feels like that breakout is significant. Number one, I mean, you have increasing volume going into the breakout. You've had, months and months and months of data at that 86, 87 level, well, about 84, 85 level. I think that breakout is significant here in the face of, what we're seeing technically. I like that breakout of 86.
I mean, the one thing I like about Square is like, it's like Tesla and Beyond Meat in that whatever the market's doing, Square does its own thing. Like Square does its own thing. And so it can counter trend against a market. I like that about certain trading stocks. All right, let's play the visualization exercise. What's the ideal pattern that would develop the next couple of days that would be like, oh yeah. So what's the ideal setup?
The ideal pattern is the breakout channel holding consolidation right underneath 90 for 3 to 4 days. The breakout of 90 after a little bit of short-term consolidation would be a significant.
I agree. That's what I would love to.
Mm-hmm. And by the way, this chart is beautiful because anybody who's been around the market for more than a couple of years, we remember how much of a juggernaut Square was when it broke out in 17 and 18, just a runner. So any of these breakouts up at the high, maybe Square can develop into some of these longer term trends.
And to bring the whole show back around, I mean, highlight that 17, 18 stretch on the weekly chart, and it shows you the power of trends once again, where it goes up, comes back down, go back it up, just back up that bus just a little bit. But during that nice, beautiful, this trend lasted 18 months, right? And so it would, whenever it had sell-offs, it would come back to a rising 20. I mean, look at every time it hit the 20 weekly, bounce, 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 bounce. And it's just when trends get going, they can be really, really powerful. It's one of the frustrating things about this environment, right? Is, this is a nice 18-month trend, which you can trade 25 times. Things have been so fast lately that, we don't have these nice steady trends to play into. But square market darling, there's no doubt.
Yeah, good call on that one, and definitely interesting on the breakout. Let's keep talking markets here. We had a couple of earnings, Matt, that I was interested in. One already happened. DKS, Dick's Sporting Goods, retail, and those mall-based type stores have obviously been deeply impacted by the lockdown. What do you see in the data if you did get a chance to read it, Matt?
Yeah, Dick's Sporting Goods, really the only significant earnings we had today coming in. Obviously, we have a few coming in tonight and later on this week as well. But Dick's Sporting Goods came in at $1.21, a loss per share. The expectation was only 50 cents loss per share. And so obviously the EPS numbers was a little bit damaging here. They also missed on revenue at 1.3 billion versus the expectation of 1.6 billion on Dick's as well. And by the way, Dick's is a really, really fundamentally strong retail company, but retail has just struggled in this environment. Revenue, which was to be expected at a retail store, down 30% year over year. And what is ultimately impressive here is you miss on earnings, you miss on EPS, you miss on revenue. You have revenue decreased by 30% year over year. But yet that mentality, guys, I've seen it in these earnings reports in these retails, the price performance after the earnings report in these retail companies. But that theme, and we talked about it earlier today, that theme is so strong about how we're discounting all negative information right now because everything's going to be better in the future. That economy reopening up theme is so powerful right now. If you're an investor in Dick's, and Dick's again is a fundamentally strong company, it's a top of 25 company. If you're the investor and you're looking at this, if all you're doing is looking at the earnings numbers and you discount everything else that's happening out there, Dick's should be down 20% right now. It should be down a minimum of 20% right now. But because that theme is so ridiculously strong right now, and I saw Cody make a little joke earlier today about how now I'm the member of the team. I'm not. I'm a trader. I'm both ways.
I know that's why it's just so funny though. Hearing you make a bullish argument of why things are just going to keep going up. It's like, oh, Matt's joining the team.
It's going to change at some point. Right. Yes. It's going to change at some point. Maybe that's second quarter earnings. Maybe that's, when we see the economic data come in the third quarter, if the economy is not recovering to the hopes of what the market expects. I mean, the market, and I hesitate to use this word because, you guys know I don't like this word, but the market's pricing in a full recovery here, guys. I mean, not just a moderate, U-shaped multi-year recovery. They're pricing in current price right now. They're pricing in a recovery for the next 3 to 4 years, and it's in the current price right now. And so, in fact, just today, I read an article that was basically stating, and this is something we've talked about on the halftime report at length as well. A month and a half ago, it was okay. The economy is going to recover by the third and fourth quarter of this year. And then all of a sudden, when people started seeing how devastating the economic data was, it was like, okay, now the economy is going to reopen up in 2021 and everything's going to be great by the end of 2021. And now we're starting to talk, well, the economy is going to take a little bit longer. It's going to be 2022. By this time, like in 3 weeks from now, we're going to be talking about, the price is going up because the economy is going to recover by 2025. It's absolutely ridiculous. It makes no logical, no rational, no fundamental, no economic sense in any capacity. But that belief in the economy reopening up and everything's going to get back to normal, that is so powerful. And one of the reasons it might be so powerful is because we just might want it so bad. As a society, we just want some degree of normalcy right now so stinking badly that we're going to believe in fairy tales and fairy dust. It's just absolutely insane to a certain extent. But again, you can't discount how powerful that thesis is right now. And the only evidence you need to see it is in Dick's earnings numbers. Their earnings numbers were devastating. They were absolutely atrocious. And it's up 2.3% on the day.
Yeah, but all that's priced in. The fact that you use that phrase now, it lets me know you are squarely on the team, at least in the short term with the charts.
Not on the team.
I'm
talking about what the market believes.
No, it is. But here's the thing. I mean, Dick's, I actually read a report that ties into this a lot, Matt, because people are assuming about the future. They're not worried about the past. That when asked by consumers, what are you more willing to do? more people were willing to go back to stores like department stores. 44% said they were more likely to do that than dining rooms like an Applebee's or whatever it might be. So these big box stores, I mean, Dick's earnings last quarter, they just don't matter. It's been the theme of the market for a long time. It just doesn't matter.
No,
it doesn't matter.
But again, it's not. I don't believe it's just based on data, because this data has not been good, and it's shifted the goalposts too many times. I truly do believe there's just this underbelly of thought out there that is just so sick and tired of shutting down, and so sick and tired of staying at home, and so sick and tired of not living the life that they had before this pandemic, that they just want it so badly for things to get back to normalcy that they're willing to buy into the belief that it's going to happen regardless of whether it's in the data or not.
Mm-hmm. Yeah, no, and I understand it. I have those feelings as well. It's hard not to fight those. It's hard to fight those emotions. Yeah,
I do. I want to take my wife out to a nice little, date night dinner, go to the movie, take her to a restaurant without worrying if I'm going to get corona. I want that. Everybody wants that, and so I do believe there is just this wanting, this wishing, this hoping, this desiring of some degree of normalcy, that they're willing to buy in to the belief that everything's going to recover because they want it to recover. And that's why we're discounting a lot of the data right now.
We're going to go play golf this week, bro. We're going to get out. We're going to do something. You got to do something. And besides just staring at these charts all day.
Fine, but I'm not wearing a mask playing golf. I won't do it.
I'm not either.
That's my line.
Why would you?
Well,
that's 6 feet apart. Golf courses are putting everyone in their own golf cart. Like, there's no reason. You're going to be outside in the heat.
I'm just saying, I'm willing to wear a mask at Walmart or at Target.
That makes sense. You're indoors in a social environment.
Mark,
I'm not wearing a mask playing golf. I'm not doing it.
Mark, do you even own golf clubs?
No. Why would I?
It's not your game.
I got a baseball bat.
I've got a hand-me-down pair, and I'm just recovering from a sunburn. I went golfing 2 weeks ago and got myself fried. It was awesome.
Dude, Dick's Sporting Goods sells golf clubs, Mark. Maybe you can go down to the department store, improve their earnings a little bit, buy a set. I don't think that's going to happen. Zoom video next.
I can't sell a naked put on the golf course. So
yeah, you can. You can trade right from your phone.
You could do a naked. You hold on. Wait up. There's a joke here. You could do a naked putt. Come on, you can do it.
There you go, buddy. Mark, I want to introduce you to a new technology called apps.
Listen,
like,
it's so small though, and my vision isn't. Listen. Any excuse.
Do you know how much trading I've done from the golf course? And how, dude, we used to go out with Bo Moody and Bobby and Matt, and we'd all just sit there with our phones and check in trades and enter in trades. You can trade on the golf course, 100%.
Dude, I can't have all the charting tools on the golf course.
Mark's too old to trade from a phone. I'm too old to trade from a phone.
It's also very hard to trade from the golf course when Bo Moody is literally yelling at you about how bad at golf you are.
He's a little too grumpy.
He's helping that trading mindset there.
Yeah. Zoom earnings tonight, guys. I want to talk about this. I wrote the daily email on this topic here today. I'm fascinated with this earnings call. And obviously, we've got this projection. The market maker moves about 13%. We've had this huge run. Mark, you grabbed my interest about these big buildups. Matt, we had great conversation on the show yesterday about these big run-ups into the earnings. Now, here's probably, if you named a stay-at-home stock, there's a bunch of them, obviously Wayfair and Amazon and some of these other ones, like DraftKings has been a crazy stock going nuts. But Zoom comes to mind almost first because so many people have adopted Zoom. And here they are tonight. Their daily user counts have been projected to be great. Does that convert to revenue? There's a problem here, Matt. They're valued at $50 billion, but they're only projected to make 9 cents a share on $200 million in revenue.
Insane.
It's insane.
Absolutely insane. And don't get me wrong. I love Zoom. I love this. I love this little company. Right. But to justify a $50 billion market cap after 180% price appreciation year to date, you got to have a very good earnings number in my opinion. You're priced to fly here. I mean, you are priced to fly from a revenue perspective. Zoom has to overwhelm. Zoom has to justify this from an earnings perspective. You got to beat. I'm very, very hesitant. Nothing would shock me with Zoom. I mean, if there's any company that represents, well, let me rephrase. Name me a better company that represents what has transpired in the last 3 months than Zoom. Both from a societal perspective, as well as an investment perspective, a trading perspective. Name me one company that better reflects what we've been going through in the last 3 months.
I can't. I mean, there's some companies that are in the same field, but this is the number one.
But
yeah,
but it has
like a Peloton. I mean, Peloton.
But
You think
Peloton hasn't taken the social conscience like Zoom has.
I know.
School kids aren't talking about Peloton; they're talking about Zoom.
Well, and I was even thinking about that as well, Matt, because are these kids who open up all those accounts and all those daily user counts that were so high during April and May? I mean, in the fall, we're not projecting to have stay-at-home school. We're projecting to have kids back in school, right, wrong, or indifferent. That's a different conversation.
Well, if I was the CEO of Zoom in the conference call today, when I see my numbers and the numbers do not justify a 50 billion price tag here, there's no numbers that Zoom's going to come out with tonight to justify a $50 billion price tag. No numbers. But if I was the CEO of that company and I wanted to continue to see that 50 billion go to 55 and 60 billion, and maybe even cash out some of my shares at the massive rise in price, I'll tell you exactly what I would say. Let's see if the CEO says this tonight. They're going to focus on subscriber growth regardless of if those are just free accounts, paid accounts. They're going to focus on subscriber growth, and they're going to get the market to try to focus on subscriber growth, even if that does not impact revenue.
Yeah, I did see a very, kind of curious headline around that regard, though, Matt, because subscribers are different than attendees. What they've been reporting as their huge growth has been attendees, people who don't necessarily have a Zoom account, just been showing up to meetings and whatnot, who've been
That's
invited.
like Facebook announcing subscriber growth by just somebody thinking about Facebook. That doesn't make sense.
I know. And how many paid users versus free users? How many have converted? I know they're also only putting in the real cybersecurity software for paid user accounts because they can't afford to do the free user accounts. This is a wonderful business model. It's a wonderful company branding. Nobody's going to argue that at all. Tonight, we're going to get a first peek on whether or not this stock has gotten way ahead of itself or whether the Momo train can continue.
Nothing I had to say is it reflects the quality of what this company is. I really believe in this company. I believe in it long term. But from an investment perspective, I mean, with the skyrocketing price we've seen and the market valuation increasing so dramatically in the short term, can this be sustained in the face of, maybe the economy reopening up, people going back to work, kids going back to school, corporations not doing as much over, from a stay at home, obviously Facebook's going to have more walkouts, all of that jazz. But, I just think they have to justify their price in their earnings today.
Mark, you've been doing naked puts into earnings. Can we sign you up for Zoom?
Call me old fashioned. I'm not really interested in owning for 10 years companies with a forward PE ratio of 464. So
no.
464. That's a bargain at twice the price.
and a current PE ratio at 2,000. So you have a forward PE ratio of 400. You have a current PE ratio of 2,000. Call you old fashioned all you want, but well, that's a tough pill to swallow there from an investment perspective.
There is something to be said about Zoom, right? But pull up Beyond Meat. I mean, we see this happen with cultish type stocks, and it's just that TP goes down a lot, right? Beyond Meat, big, huge run up, hit 239.71. And then it was a nice slow descent down, right? So if you really like Zoom, I don't know, right? Like, I'm just greedy though. I'm always conservative. Like, I got plenty of time to invest in Zoom over the next couple years if I want. So.
Well, and by the way, I have no idea if it's going to gap up, down, or sideways.
Zero idea.
It would not surprise me to see upward mobility here. You still have so much of the hype train around the thing. I'm just saying, as somebody who's been watching this,
all right, no money on the table. Pick a side, gap up or gap down.
I think we're gapping down.
I think we're gapping down too.
That would be my projection. You run too far too fast, and the earnings are not going to justify it. I think that you're going to see downside.
I mean, what have we seen? We've seen run ups, build up, and then sell. Right? You saw it with Take Two last week. You know, is a perfect example of the run up, post earnings, had a decent earnings report, got sold off, coming back down into the moving averages. So I think the most likely scenario is a gap down, but nothing would shock me on Zoom.
It's going to be an interesting one. We'll break it all down tomorrow. Let's keep working through the markets. Next one, Marriott, actually. Give me this one if you can real quick here, Noah. Just some interesting data on the reopening theme. Mark, I don't know if you're interested in hotels at all in terms of investing from a rebound type perspective, but Marriott gives some interesting numbers. In February, when China was on complete lockdown, they only had 7% actual capacity in their hotels. Today, actually now 3 months later, they're at 40% and they're in an uptrend, and numbers have been improving week over week over week. In the US, they're already back to 20% occupancy. And they actually came out and said, I don't know if it was the CEO or the CFO, they don't think there's going to be a long-term impact on their business model. They're very optimistic about the future. There's a little shelf there, breakout potential. Any interest, guys? Mark, you first on the hotels.
Well, I mean, I've been playing, once again, naked put style on distressed industries a bit. Marriott's definitely one of those in that distressed industry with airlines and MGM and Six Flags and Kohl's and Planet Fitness and all that. So, like, I mean, all of these companies basically have been trending together. All of these companies need the same thing. They need people. They need people in their movie theaters. They need people in their casinos. They need people in their hotels. So it's all a matter of, like, where do you want to play it?
Mm-hmm.
Like, you know, you got this group of companies that need people, that benefit from a strong reopening, that have upward mobility in price if everything gets back to normal. If everything gets back to some semblance of normal, all of these companies are likely to go up. So how much of your portfolio do you want to put into that? What are the plays that you might see safer than another? I mean, that's the big question for me in these distressed industries. And so, but if everything opens up and you get back to normal, they all benefit. So it's like probably picking between a bunch of winners, which one has the higher upside.
Well, and this one may not have the most upside, but there might be some safety in the brand name here and just the dividend and stability of a Marriott. Obviously, if you are looking for a stay-at-home play, I mean, cruise lines, airlines, we talked about a few airlines we liked yesterday. The reopening theme is real, guys. It's going to continue. We're going to see more stories like this. Microsoft, Wells Fargo came out. Give me Microsoft real quick here, Noah. Matt, an analyst at Wells Fargo came out and said that they think Microsoft's going to hit $2 trillion within the next 2 or 3 years, just based on their cloud growth alone and the revenue they're going to have from that.
They're expecting in the next 2 years what would that be on Microsoft? They would need about
50%.
50% price.
They're 1.37 trillion trillion
price appreciation.
Mm-hmm.
So they're expecting in the next year and a half a 40% price appreciation on Microsoft.
Mm-hmm.
It's Microsoft. I
hard to argue. It's not a shocking thing, but the $2 trillion price tag grabs my attention.
Well, I don't think it's going to happen in the time frame they're talking about. I don't believe that. I think that's a very, very, very dubious statement. But I will say that it's not going to be shocking to me in the next 5 years to see either Apple or Microsoft be the first $2 trillion company in the U.S.
Yeah.
And you know, it could be Amazon, it could be Google, but I would put the leaders in that horse race on Apple and Microsoft.
Mm-hmm. Pick one FANG stock, Mark. You only pick one for several years. Facebook, Apple, Amazon, Microsoft, Google.
All right. Google could get caught up in monopoly problems. A lot of small businesses are going to go out of business, and so I don't know where the ad revenue is going to be on Facebook. Like the company, actually like Zuck as, you know, somebody managing my money, but there could be some ad revenue problem. Apple had to slash their iPhone sales dramatically in China. There could be supply chain issues. I don't know, something like that. Microsoft's one of the most fundamentally sound companies in the entire world, with growth aspects to their company, as alluded to in that report. It's an easy call for me.
So Microsoft for Mark. Yeah, it's easy for me too. I agree with everything Mark said. It's Microsoft. I think it's yeah, Apple could get there faster. Amazon could get there faster. Both have better, growth in them than Microsoft does. But Microsoft is the safer play, and I would still put it 1A, 1B in getting that 2 trillion. So for me, it would be Microsoft as well. They don't have some of the hurdles that some of these other companies have.
Yeah. They got so many different ways to make money as well. And by the way, their ESG rating is AAA. It's the top in large cap tech in the whole market. And there's a lot of money moving into those environmental, social, and governments type stocks. It's a hot stock. They're all hot stocks. I get it.
You say the same thing about Google though too.
Yeah, Google's up there. Google's up there as well. Yep. Next one, Carnival Cruise Lines, more reopening theme. They're actually going to push the, how they were selling all those cruises in August, Matt. They're not sailing until October, they say, based on the headline I read. There's a lot of clear air there, but Mark, you were talking about how that would all go up if the whole reopening theme. I'm still very cautious with the cruise lines here, but I cannot argue against a breakout there at $20. You guys have any interest in playing reversals in this kind of company?
I have zero interest in Carnival Cruise or Royal Caribbean at this point.
Marky?
I think the projections of August, I said it at the time, not going to happen. October, I also don't think October is going to happen.
Yeah.
I sold a naked put last week on Carnival, full disclosure. So,
What strike? I mean, how far deep were you? 5 strike?
$10, yo.
Moving them up or moving on up. I
am. I've been moving my naked put levels up, so obviously that was last week. You're not going to get the same price for it today, but I buy the reopening thing.
You so desperately want to get assigned some of
Dude,
these.
I want to own freaking something
Just buy the equity on a breakout.
Something. Yeah. You can buy equity if you want to get Delta.
Hey, you shorted for the first time in many years a couple of weeks ago. Buy a breakout.
Listen, I'm not afraid to buy a breakout. I like it, but I want to have I don't know, man.
Listen,
but it's
the
also
first time Mark buys a breakout, that is significant to the point where everybody should buy anything they can.
That's what I said.
I'm a full board team member at that point.
Seriously, no. Like last October when the market broke up, we were on an internal meeting, and I even said, "Yeah, I'm going to buy this breakout." I mean, because there was nothing like, if I'm buying a breakout, that means there's not a single worry in the entire world going on. But no, listen, but when you're in a rhythm trading, right, when you're doing stuff, I mean, I probably sell like 20 naked puts a week or something like that, right? Like I sell a lot of naked puts a week. And when they're all expiring worthless and I can sleep at night and I'm happy with the price levels, if I were to be put the stock, I mean, when you're in a rhythm trading, however it is, it's hard to want to deviate from that if things are doing decently.
Dude, if you're hitting your targets, you're running your system, you're staying rule-based, don't overthink it, obviously, but I know you want to buy a breakout. You're so tempted. You do.
I want to own something because
I know.
I've been because I've had this theory on distressed companies that, if you get that sell off and you put the stock, there's really good price appreciation to the upside. The problem is I never get put the shares.
Mm-hmm.
So
feels so good to buy, Mark. Just click the damn button. Nothing wrong.
Listen, I only buy when I can't see a single thing getting in the way of that trade. And I'm sorry, China's still out there.
I was going to say that's what breakouts are.
But there's still all of these things hanging over the market. But I do like those trillions and trillions and trillions of dollars that the Fed and the government are putting into the economy.
A couple more for me, Matt, that you had on my list. NetEase, they did a round of funding, I believe. Actually, look at this chart here, Noah.
They did a second. And Mark, talking about buying something in the face of nothing stopping it. Again, that's what a breakout is. When you're breaking out of $400, a significant whole number, and there is nothing left to the chart on increasing volume. I mean, take out the news that happened today. That is a really, really good breakout from a technical perspective.
Oh yeah, I know.
The news is interesting though. The news is excuse me. The news is interesting. They offered a second listing on the Hong Kong Stock Exchange. This is a Chinese company, obviously. That they're looking to bring in about $2.8 billion in new money coming into NetEase. and obviously the market is celebrating it today, but it's not just the breakout. It's the breakout of certain significant levels. When you break out of 387, that's not exactly the same type of breakout as 400. Right.
Yeah.
You have a very consistent resistance zone right there at 400. It's a significant whole number. The breakout there is strong. The volume is supporting it, especially in the last 3 days, guys, running into this breakout. You start to see volatility pick up. The last 3 days, every single day it's finished at the high of the day. It's basically been a no sell 3 days on NetEase. And then you have the news of the secondary offering on the Hong Kong Stock Exchange. Couple that with the increasing volume over the last 3 days. Technically, I mean, find me a better breakout that matches all the criteria that we look for in a breakout.
It's beautiful. There's no question about it. That is in the volume picking up here, and the news and the sentiment have been great. It definitely got to be on a watch list. If not, if you haven't already had it there for sure. Next one, Matt, the gun companies are still running. Give me Ruger, RGR. I don't even know if that Smith & Wesson symbol came in today or not in Thinkorswim, but this whole theme, Matt, is pushing prices in these types of stocks, security stocks, gun stocks, that kind of thing. It feels like a trap to me personally. I'm not playing this. Anybody here interested in these companies?
I'm interested a little bit, but not because of the protest.
Mm-hmm.
Is SWBI on Thinkorswim yet?
It is now.
There it is.
Wasn't there yesterday, but it is now.
It is now. I mean, I like, once again, the naked put down in that galosh of mess.
Like 10.
You have a galosh of mess, but I don't know, man. I hate when I think most of us do, when you get these gap and run things, they just mess with technicals. You can't get a feel. It feels like the second that the riots and the protest ease up, Smith & Wesson's going to tank that day.
Mm-hmm.
So.
And I get the initial burst here, obviously news-based driven and all that kind of stuff. I'm just personally going to approach them with extreme caution here with these runs. I think any trader would. Apple Computer, Matt, you had that one next on my list. I want to make sure I hit some of these ones. Just looking at this breakout up here, Matty, what'd you have on Apple?
Oh, we already talked a little bit about Apple. The news of the day was they slashed prices by double digits there in China on their iPhone offerings. It's not reflected on the Apple website yet in the Chinese version of Apple's website, but it is reflected in the secondary market. So that was just the news of the day. Nothing really to see here. I mean, if you're talking about a boring day in Apple, it's literally have done nothing on the day. It's down 1 penny, down 2 pennies, up 1 penny. We're still consolidating underneath that breakout channel. And I think like a lot of traders, a lot of people who track Apple, it's one of the #1 companies in the world that people trade, invest, and track. I think we're all just kind of being patient and waiting. It's like Noah said earlier today, I don't want to be the first. I want to be the second. Right? If we're going to jump off the cliff into a body of water 50 feet below us, I want to make sure it's safe first. And so let's see that breakout before we front run it. No doubt about this. But I think we're just waiting on that breakout now.
4 real quick ones. Max is going to give the news, the analysis. Then Noah, you go through the charts. Boeing, Sony, Lulu, and Slack. Let's start with Boeing.
Boeing, very simple. Just some news of the day. Boeing is going to arbitration with Embraer, the Brazilian plane company that they were going to have a deal with over the failed $4 billion deal. I don't care about that at all. But are any of you interested in Boeing right now?
Yes,
I am.
So am I. For the first time in a long time.
And I'm interested in multiple fronts.
I'm getting some FOMO on Boeing.
I am getting some FOMO on Boeing as well. In fact, the first stock I looked at this morning was Boeing. I like it from an investing standpoint at lower levels. I think the reopening play benefits Boeing, but I think the aerospace and defense play stabilizes Boeing. And from just a pure good old-fashioned trading point of view, that's a nice little pattern developing here. Mm-hmm. Go to the weekly chart. You got nothing but clear air to $199. That 20 weekly is a million miles.
Just call it 200. Just call it 200.
And so you got some momentum starting to build. You got some technical patterns starting to solidify. You got some clear air to the upside. There's some FOMO here, right?
For me, yeah. Yeah, I'm definitely
me too.
interested here, Matt.
Me too.
You know, how you play it, how you enter it, those are all debates and discussions, obviously. But I like a little breakout above that little level right there. If you're looking for a trading signal, I like equity directly or even spreads. I mean, there's a lot of ways you can approach it. Boeing is a wonderful trading company for years and years and years. We've talked about them in this show probably as much or more. Have we talked Boeing or Tesla more, do you think?
We talk Boeing. We talk Boeing a lot on this show over the years.
Yeah,
I would say we have talked more about Boeing than we have Tesla.
Mm-hmm. Yeah.
I mean, usually when we bring up Tesla, we don't stay on it very long because we just don't, right?
Mm-hmm.
Boeing has had, we've had a lot of discussion on Boeing when Boeing, you know, initially when the planes went down and then the breakdown of 400. I mean, there was a time period for about 3 straight months where we talked Boeing every day.
Yeah. Yeah. It's been one of the most talked companies in our reports and shows, and it's very tradable. People love the stock. There's no question about it. We podcast on that about a week and a half ago. Look at the chart. It's just playing defense. It's developing. A lot of interest in
which symbol are we looking at?
Boeing right now, but let's go to
Okay.
Sony next. Matt, gaming news on Sony, I believe you had. Is that right?
Sony, what are you doing here? And I know the market is saying, okay, we're going to break out anyways. But if there's ever a time to release a new PlayStation, it's now.
Yeah.
Now, get it out there. You'll
People-
you'll see record sales. But Sony's not ready for that. They have postponed their PlayStation 5 release, and I don't have an updated release date on it. But so that was the news on Sony today. Nice little breakout happening, perhaps, on Sony. Played defense on that 200-day for about a month here. Any interest in Sony here, guys?
Breakout looks great. Gaming play has been strong. I don't think that theme's going to stop. I think it definitely has to be on a watch list. And could I play that breakout? Yes. It would just come down to choice, right? You know, you can't trade everything in the market.
Where's that old pivot high?
We're breaking it right now, I think. Yeah. We haven't confirmed
You're
it.
currently in the range. It's right there. I would say you'd put that around 66.50 mark.
I mean, you are breaking out of that high. That high last 2 weeks ago was 66.40.
Mm-hmm.
Mm-hmm.
That's breaking that out.
Mm-hmm.
RSI at 53 with some positive momentum over the last week as well. You got room to run up into that 68 level by 70. So, I mean, you can map out a pretty aggressive trade there. I do like the breakout. I love the fact that it was hugging that 200-day moving average. Don't like the postponing of the delay, but again, negative news. They're postponing a major launch. Buy. I mean, how many times do we have to see it? This market is absolutely insane right now.
Yeah. And they should release it. Stimulus checks, people got money, they're home. The gamers would come out in droves and buy the PS5. There's no question about it. Lulu then work real quick ones here, guys. LULU. I know we're running long here today, but a lot of fun companies actually talking about it. I know there's not a lot of major market news, but look how many great charts we've seen here today, guys. Matt, what'd you have on Lulu?
Again, shocking theme of the day. Lulu is up on negative news. Wells Fargo downgraded Lulu, and Lulu investors said, wait, what? No.
Don't care.
Yeah, don't care. Don't care at all.
Up on a downgrade?
On a downgrade, it's up 2% on the day after a metric rise over the course of the last.
And that's why I sell naked puts, because
wow.
Because I mean, this is crazy. I mean, it's not always going to be like this.
Lulu, a great stock. One of the only two retail companies that I actually believe in, Apple and Lulu, because they have such strong consumer brand awareness. I mean, they have ridiculously strong consumer brand awareness. I mean, people that shop at Lulu and like Lulu, they are loyal to Lulu. Say something bad about Lulu pants to them, and you'll see an angry individual. Same thing with Apple. You criticize the iPhone, you say Samsung's tech is better. It's like calling somebody's kid ugly, right? It's the same thing with Disney. If you said something bad to my wife about Disney, I mean, the gloves come off and the claws come out, right? So it has ridiculously strong brand awareness. But for Lulu to go up after it already being overextended should tell you everything you need to know about the insanity of this market, right? A downgrade, what do we typically see on a downgrade? Whether it's justified or not.
Couple percent down. You mean usually
Couple percent down,
yeah.
right? And yet, after an extended price run, overextended, Lulu says, hold my beer and watch this. We're up 2%. We don't care about your downgrade Wells Fargo. Now, not a lot of people care about Wells Fargo in general, but Lulu investors literally said, we don't care about Wells Fargo today. So that was interesting on Lulu. And again, I'm not trying to throw cold water on Lulu. I personally would not have downgraded Lulu. I think this is a fundamentally very, very, very good company. It's a Tackle 25 stock from a fundamentally strong covered calls, those types of things. But the insanity of it all to see Lulu go up in the face of a downgrade was interesting. Another Tackle 25 stock, RH. Go ahead and give me a look at RH there real quick. Restoration Hardware here. They also, another Tackle 25 stock, very fundamentally strong company. They got a price upgrade here. I can't remember what bank, but it was like their price. This is just your typical catch-up price upgrade. They had a price target of 125 on RH. They upgraded it to 250. If you've ever seen a catch-up price upgrade, you're seeing it here today. That's a bank analyst basically saying, we were dead wrong, and now we got to catch up to the current price. We've seen it. We've seen a lot in these types of growth companies. So RH got a nice little price upgrade. We talked about Apple. We talked about Facebook. We talked about Boeing. Give me Visa very quickly there, Noah. Visa, a little bit of the economy reopening up, things getting back to normal. Everybody's, happy and bloated and, fantastic. Visa reports payment recovery in May in comparison to April. In April, they saw a 18% failed payment. They only saw 5% failed payment in May. And that's just that theme we've been seeing. As the economy reopens up, the economic reports we saw in March and April, we're starting to see those get, not good, but not as bad. And that's kind of the same thing we saw on Visa here as well. And then last, we have Slack. Slack coming in the face of an earnings report here coming in later. When is Slack's earnings again?
I think it's Thursday after the bell.
Thursday, right?
Yeah.
Slack got upgraded here at a bank here today in the face of earnings. So that was the last I had from Stock Talk.
Love it, guys. A lot of fun as always. We're now I know we've been running long here today. We're having a great time here. If you're out there, your team Tackle represent, let me know if you are out there and where you're at. You pop in a question, say hello, hashtag team Tackle. We'll always do in the chat.
I've had a fantastic hour and a half.
It's been fun.
In the middle of the show, my daughter brought me an apple fritter from Krispy Kreme's. It's been fantastic.
Dude, that's sweet.
It's donut week or donut day. I think it's National Donut Day on Friday, and Krispy Kreme I think is giving away a free donut every day this week.
What's your favorite donut?
Oh, she got it for free. I thought she was doing something out of the kindness of her own heart.
Well, she did risk COVID-19,
and she brought it to you.
Killing y'all to go get it. So that's something, right?
Marky, what's your favorite donut?
I like the raspberry filled jelly donuts.
Noah?
What's my favorite donut? I don't mind a bear claw, and you got to go with chocolate icing. That's a solid choice. Unless it's from Krispy Kreme, then you just go with Krispy Kreme.
Cody?
I'm simple. I like a normal old glazed donut.
Of course, he's the oldest man in the. I was trying to get it out. I was like, of course, Cody likes the glazed donut.
Dip it in warm milk too, Cody.
Yeah.
Maddie, what about you?
I would say though, I prefer like a pig in the blanket jalapeno kolache though. That's actually what I'd go to.
There's the millennial in him right there.
That's what I'd go to for a donut.
I apple fritter. My daughter knows me. Apple fritter.
I like a vanilla cream filled chocolate covered donut. That's my go-to. Or the apple fritters, obviously great. And I'm going to have to get a donut, maybe donuts for lunch here today. Coach's Corner here, guys. If you watch our show enough, you know what this is. Last segment of the day where we kind of go around the room and talk a little bit about what's on our mind, stocks that we haven't discussed yet, charting, and anything that is grabbing a coach's attention. If you are watching our channel for the first time, subscribe, click the bell. Let's roll here. Mark, you first. What you got?
Dude, I continue to like the distressed. I continue to buy like the companies that have been beat up, the reopenings happening. I mean, the COVID-19 data isn't great, right? But it's not terrible. But the resolve of the average American, this thing isn't ever closing down again. Life's going to get back to some sort of
Hashtag no more down days.
and so I like the distress. It's just how do you play them? The Cinemarks, the MGMs, the Carnivals, the Marriotts, the Kohl's, the Planet Fitness, even your Denny's, right? People are going to get back and buy their $5 breakfast and sit down in restaurants. So just how you want to play them.
Noah, next, anything on your mind, sir?
Oh, I like the Home Depots and Lowe's plays right now. I think that they've got that potential. They're closing up above the high, so establishing new highs, and I think they have room to run. So both those stocks, I think, look poised to run. Other than that, I think sometimes there's just things you worry about more than the market. So everybody be safe out there.
Yeah, no, I'm with you. Maddie, what about you? Any stocks you're paying attention to, things you're watching?
Yeah, a couple things. Let's take a quick look at Dollar Tree real quick. I like the high base forming on Dollar Tree. We had it on the options report this week, and that was before we had the 2 more days of consolidation. I like it even more here today than I did even over the weekend. And it's like Coach Frank and I have talked about on the halftime report many, many times. When you get overextended, give me that base and let it consolidate for 4 or 5 trading days. Let the momentum slide a little bit, see that breakout and that trigger above 100 on Dollar Tree. I think you can be aggressive above that level. That's the first. Spotify is the second one.
I love this pattern. This is one of my favorites.
This is a beautiful pattern. Marty the Elephant hit support there at 180, 178. Confirmed coming back up, and now you're starting to build momentum. So I do like that from a retracement perspective. I'm still looking at the airlines here. JetBlue in Alaska, JBLU. Nice little reversal, still holding its $10 pivot point. I love JetBlue because that significant whole number at $10, that's where it double topped. That's where it broke out of. That's where it retraced into. I really like that pattern on JetBlue. If you're looking at kind of like Mark talked about the distressed areas of the market, maybe these airlines, especially JetBlue and Alaska, can play a little bit of catch up. So I do like that one. On the bear list, we talked a little bit about this yesterday, but LLY, Eli Lilly. We talked about that as a potential reversal candidate, and we're seeing that come into resistance levels right there at that 50-day moving average. You're seeing a little bit of a potential pivot to the downside on LLY. Now, we haven't seen a lot of bearish reversals actually do great in this market, but this is one that is really kind of starting to set up a trigger underneath 151, maybe 150. If you're looking for some bearish delta, Eli Lilly might see some price depreciation. And then we didn't talk about sectors yesterday, but I do think there's 4 sectors that are setting up that fairly decently from a bullish perspective. Give me XLB first and foremost, the basic materials sector. Now, when we think basic materials, we're talking a lot of gold, silver, and whatnot. But Mark, what is basic materials primarily made up of? What types of companies?
Chemical companies.
Chemical companies, right? I mean, the gold miners and the silver miners actually make up a very small portion of this sector. It's the chemical companies. You're seeing a breakout after a little bit of consolidation. It's breaking out of that 200-day moving average. It doesn't have volume to support it yet, but I do like the price appreciation. So keep an eye on those chemical companies. Keep an eye on the material sector as in general. We talked earlier today about it. Communications, XLC. This has all your brand names in it. All the brand names you love: Disney's, Facebook's, Twitter's, Google's, your entertainment companies, your social media companies, you name it. I love what I'm seeing in the price here. I love that price consolidating underneath 55. I love the 90 MA catching up to that. A breakout of 55. I think that would be significant in my opinion. And that's when you're looking at your Googles. That's when you're looking at your Facebooks of the world. That's when you're looking at your Activisions and your EA Sports and some of these stocks that have been really, really good in this environment. So keep an eye on the communication sector, breakout of 55, couple that with a lot of strong stocks in that sector. That certainly can be tradable there. Energy, we talked about a little bit earlier today. We've been waiting on that close above 40 for quite some time. If we do see a close above 40, I think you got some opportunity in the refinery companies, number one, maybe the drillers, number two, but a close above 40. And for me, it has to close above 40. We've seen it test its head above 40 before. It's came right back down. a close above 40, and then a follow through of that would be significant. And then obviously the number one sector out there is technology, and XLK forming very similar to what we're seeing in communications. A breakout here, in my opinion, would be similar to what we talked about with communications.
Love it. I love it. You guys hit almost everyone on my list. There's a lot of great candidates over there on the reports from over the weekend. If you need some ideas and watch list development, those kind of things, make sure you keep a list and build it and go and watch those reports from last weekend as well. Great job, everybody, today. Lots and lots of fun. Couple things. We are done. We'll be back tomorrow at the same time, same station, 12:30 p.m. Eastern time for a halftime show. If you're not a pro member yet, come and join us. Most of everything we do is over on our website, tackletrading.com, through webinars and reports and blogs and content that we provide to our members on a weekly basis. Our pro community is growing, it's vibrant, and definitely just a wonderful, wonderful place to come and learn how to trade and build on your education. There's a 15-day trial in the comments and the links below. Cody, I about missed you. I never bring you in on Coach's Corner. I hardly ever do, but you said you actually had one. I apologize, sir.
Oh, no, not a problem at all. I can go to Forex if you need me to give.
No, we're not doing Forex again. Don't trigger me. But you Twitter?
I currently like Twitter from the bullish pullback retracement we're getting with the intraday setup. It's got a nice little high base pushing right up against. Did we lose Noah? Noah, can you bring up Twitter for me?
You bet I can.
Noah's thinking about putting
I was
more
wondering if
boards.
Noah's protesting.
He's
I was
looking at his
wondering too.
treehouse.
No.
He's staring at his work out in his backyard.
So right up to the
I know.
200, this would be a quick trade, possibly 35, but go intraday for me off that little pullback. And this is why I like it a little bit more. I've been doing a lot more of using intraday analysis to trigger into my day trades. I really like that little high base. It's got very clean trigger to trigger into that. And the stop, I'd probably put just below that base. I won't even go all the way down to the pivot.
Yeah. Beautiful intraday setups there. Got a little news around Twitter lately, obviously. It might be more, kind of just
That's why I'm using the tighter stop.
Hold on. Trump hating on Twitter, you don't think that's bullish for Twitter in the long term?
It probably is. There's no doubt.
Could be. But regardless of the news around it, I like that intraday setup. Tight stop. Good risk reward on it. That's why I like it.
By the way, if you haven't done it yet, thumbs up. And if you're watching the replay, let us know if there's any way we can help you. Great job, everybody. We're out. We'll be back tomorrow.